I'm Dan, and welcome to 12 Ways to Make Money in Crypto. We're going over investing, day trading, staking, mining, validators, shorting, airdrops, arbitrage, predictions markets, trading bots, and yield farming. There will be time codes in the description to jump to any of those, and we're going to discuss the pros, cons, and opportunities in all of these. I've been in crypto for 8 years, learned a lot, and a lot of these ways don't work if you use the wrong strategy, like investing in something too early. We never want to be too early to the party because we don't know how long the host actually wants to be there, where they might just disappear and take all your money. So I'm going to help you get around that and find the real opportunities. So if that sounds good, hang out for this entire video and stick to the end because engagement, stuff, crypto, content creation. All right, let's dive in. Number one, buy a coin, spot trading, or just investing in a coin. So just by you investing in a cryptocurrency, you are holding the potential upside and downside. And if you are buying a coin for the first time, you'll likely use a centralized exchange, something like a Coinbase or a BitGet or a no KYC exchange, something that doesn't ask for identity, but that takes time to get to. You have to learn how to move cryptocurrency around. You have to learn to fund your account, and you have to know which cryptocurrencies to invest in, because if you are investing in a new coin, sometimes they don't do well. They don't do well for a long period of time. We can look at something like Pi, where it's steadily declining and people can mine that for free, which we'll get into later about cryptocurrencies you can mine. Whereas other cryptocurrencies that are still newer don't have the same opportunities as something like Bitcoin, which has been going up over time. So anytime you look at a new cryptocurrency and you think it's a good investment, it might be for a short period of time. For the most part, a long period of time, it isn't. And I make content explaining that weekly so we can look over the coins that you might be interested in investing. Just join the live streams or mention it in the comments. So to sum up, if you want to invest in a coin, you buy that as a spot trade. That's what it looks like on centralized exchanges, where you just buy the coin, you invest in it, and you hold that cryptocurrency. That is considered spot trading when you are buying or selling it, and you would be holding that in your accounts where you have the potential upside and downside of the price movement. So yeah, that might sound too technical, but basically that is investing in a coin. And on the other side of that, if you use a decentralized exchange, if you're on Sui Network, if you're on BNB chain, if you're on Ethereum, Polygon, Arbitrum, any one of those, they're going to have decentralized exchanges where you can trade your cryptocurrency for other cryptocurrencies within that network. And you would be holding this, you would be responsible. And this does come at a lot of different risks. You do get the earliest opportunity of being early before a coin is even listed on an exchange. But even if a coin does get listed on an exchange, it doesn't mean it's going to be successful. So again, for any new investments, for new projects, always think short term. Number two, day trading. Now this is not a thing. You are absolutely going to lose money. Day trading, you're going to be emotional. If you are a new trader, obviously you can't do day trading. There are courses, of course, but those aren't consistent. One bad trade, one macro movement in the global economy, and all of the thoughts on it is meaningless. I tried day trading for like a year when I started getting into crypto, and I realized none of that really works, because if you are doing that for the long term, you can get screwed by what happens in global economics. So it doesn't really matter. And holding long term is a lot easier if you find the right investments. Day trading, it's easy to get anxiety, emotional, and make a lot of mistakes. It's not something I recommend. And if you look at people with day trading courses and see how people have done over the long term, I think you're going to find that it's not good. It's not good. So, always look for things with a good track record. And I really consider day trading as gambling and don't recommend it for anyone. If you are a new investor, you should absolutely not day trade. It's like saying like, oh, I know how to play basketball. I've seen people do that. Let me take a basketball course and try to compete in the NBA. No, you can't do that. Day trading takes a lot of experience. It takes a lot of emotional management to do the right things at the right times. And even then, it doesn't mean you're going to be right. So, if you ever considered crypto day trading, other types of day trading, all of that is just gambling. They're just trying to motivate you to buy their course or something like that. So, be careful, don't do it, and just grow your experience over time. Next up, staking. Now, with staking, this is you buying a cryptocurrency, then staking it or locking it to the network to earn more in rewards. Now, there's a few problems with this. A lot of the new staking projects don't have any use case. They say the staking is to secure the network. They might offer high staking rewards, but in reality, you get screwed. I lost a lot of money staking things for the high rewards while the token price went to zero. So I've learned my mistake, and you don't want to stake coins at all. You always want to have access to your coins. You want to be able to sell, and I would avoid any project that has high staking rewards. In fact, I would short them. That's me betting that the price would go down over time, because a lot of times they're offering high incentives with still no coin demand, which means the coin price is going to trend to zero while founders and people who were early exit, and you, the staker, holding your coins on there, price goes to zero, your coins are locked up, and you lose money. So that's why you want to be very careful, and you want to avoid projects that offer staking unless they've been established for a while, unless they have reasonable staking rewards, something less than 10%. So you want to make sure that the tokenomics make sense for whatever they're doing. And again, it pays off to not be early in these situations. And then we have earning interest with stablecoins. Now, this is amazing because you earn interest for just holding these coins in your account. It is not locked, it is liquid. And with Coinbase, if you're holding USDC in your account, you are getting 4.1% APY. The interest is automatically compounded when it's APY. Now, that is pretty good, but you can take on more risk, of course, when you jump into DeFi. You can get 200,000% in interest with Clearpool lending. I'm not sure exactly how that works, and I'm not interested, because when you have these higher rewards, you have higher risk. So you never want to jump into a pool where you're not familiar with what the other coin is and how long it's been around, because obviously you take on risk with that unknown coin. You don't know how it's going to perform over the long term, and that could take out any potential gains you get for holding. So you can see Bagful on Blast for just holding USDC there. You get 52% in APY, but Blast hasn't been performing well as a blockchain. You don't really know how well it's going to perform, and we see this little parachute, and it says this project has no token and might airdrop one to depositors in the future. So that does create more opportunities if you believe they're going to be around for a while. And, they could still airdrop. So we really have to see that blockchain build more and build more trust. So something to consider. You can see max APY here, and that's 48%. So with more rewards comes more risk. Crypto mining. So you can mine things like Bitcoin, Litecoin, Doge, and a lot of different projects. The problem is you don't know if you'll make money or not, if you'll get a return on your investment, if the difficulty is worth it, if the electricity you're paying is worth it. In many situations, it isn't. So a lot of the times you might see a new cryptocurrency that offers crypto mining. It offers these high rewards. But again, much like staking, if there is no demand, if there is no building on that network where people are developing, where people are getting funded to develop on there, where users are getting onboarded and they're growing out this ecosystem, it's going to turn out bad. So crypto mining, very dangerous. And honestly, this is the same thing as validators. So crypto mining is when you run machines to secure the network, and validators does something very similar. So I'm gonna continue this trend of just using these things and enlarging the text so you understand that validators, where you buy these machines that secure the network, is kind of a scam, because if no one's on that network, there's nothing to secure, there's no demand for it, and a lot of these projects that offer validators go to zero over time. So you want to be careful with that. And yeah, this happens a lot. I see it all the time. So I want to make sure you do all right and you avoid getting scammed by these types of projects. Then we have shorting. Shorting is when you bet that the markets are going to go down for a specific coin. So if you think a coin is going to drop in price, that is something you want to short. And this can prove to be an opportunity in itself as long as you don't use too much leverage where you bet more than you have to risk. And in reality, a lot of coins trend to zero. So you want to look for things that might not make sense, that might have raised way too much money, and I'll probably make more content on things I look for when I'm shorting. I've discussed this in different live streams and interviews with other social media people online. So it's something to consider. You should never keep in mind that a coin doesn't go up forever most of the time. If there isn't any demand, if they have too much money, if there is a team that is just getting free tokens, if there's people just getting free tokens in that economy and no demand, the coin price is going to go down, and that's when you want to short, and that's how you make money. And that can consistently happen for 99% of the projects with the right timing. Because if we're in a bull market, everything's going to go up. It's not going to make sense. But even in a bull market, coins still trend to zero as projects begin to exit as the markets pump. So that is always something to look for. Airdrops. Now, if you want to make money in crypto with airdrops, that is very possible, and it is an easy opportunity. But as these things get more competitive, the amount you make could be even less. Now, there are several different types of airdrops, some that require funds, some that don't require funds, and some that are good and some that are bad, as in you get a high return for your time or not. So it is really hard to tell what's going to be a good airdrop or not, even if a project raised a lot of money, because you don't know how much people are actually going to get. That is all really done behind the scenes because the team themselves could be running multiple wallets. They could be farming that airdrop themselves and taking advantage of what actually gets distributed to the community. Now, airdrops do require time and effort, so in a sense, you're really just working for the potential of being paid. There is definitely a lot of opportunity in this, but it does come at the risk of your own time and sometimes your own investments that could have more earning potential doing other things. So that is something to consider. I've made airdrop videos in the past and will continue to make them in the future, because that's an easy opportunity for you to make money without much risk in most senses, as long as there isn't an investment required. So look forward to more of that on this channel. Next up, arbitrage. Now, arbitrage is when you take advantage of the price differences in two different markets. So let's say Coinbase is selling USDC for $1.02 and Binance is buying USDC for $1. So for example, let's look at a token. You can see that here on Gate.io, the price of send is 8014, while on Bybit, it's 8005. Not a significant difference, but if we look on other platforms like MEXC, it gets a little different, and arbitrage is really the price you're paying for that coin and if you can sell it more on another exchange. Now, not the best example, it is just something I had up here, but these opportunities do appear when new coins get launched and there is a price difference between the amount of liquidity on one exchange versus where you can buy it on somewhere else. So arbitrage opportunities do come up just because the price hasn't caught up on these other exchanges, so it does provide an opportunity. I made a detailed video about this on this channel. Even though it is a few years old, it still holds up. It is the same strategy and it hasn't changed at all. So look for that on this channel. Then we have betting, straight up betting, but in crypto, we need a fancy term, so we call it predictions markets. So you've probably heard of poly market, where you can just bet on things you think are going to happen, like the next Prime Minister of Canada after the election. Is it going to be Mark Carney or Pierre Poilievre? I'm guessing that's how you say it. Who the next pope might be, if there's going to be a US recession in 2025, and more. So this is just you betting on what you think is going to happen. And a lot of times, the poly market majority is right. So it does pay off to go with the trend, but there's no guarantee in all situations. And there's other markets too, like myriad markets. They do something similar, and sometimes they have the same type of bets available here. And if the price is different, that is another opportunity to arbitrage. So just another opportunity for you to find places to make money, to bet on things, and is still obviously risky. But if you have insider information where, let's say, there's a sports game and you think one of the teams is going to be injured, maybe you have some insider info of when Nintendo is going to be tariffed and they're going to raise the price of the Switch. So there's lots of different things you can bet on. You can use your personal research and uh, innovation and inside information, whatever it may be, to create these opportunities in these markets. Then we have trading bots. Now, trading bots won't necessarily make you rich, but it depends on the market conditions, because what trading bots are doing, they're trading for you within a certain range. So if we go to BitGet, they have trading bots, they have all these different types of trading bots, and for the most part, they work within a range. So let's say we're spot trading, we're doing these grid trades, and as long as the markets move within a small range, then you're going to make money. So let's say Bitcoin trades between $100,000 to $90,000 for an entire year. It's automatically buying and selling your Bitcoin for USDC and vice versa, and you continue to profit off that. So you're buying low, selling high consistently. But if the market trends up, then you lose the potential gains of just holding. If the market drops, then you lose those potential losses too, something like that. But basically, it depends on the market conditions and what types of bots you use. And again, it's very hard to predict what happens in the markets, so trading bots can be good or bad depending on what you think is going to happen in the markets. So if the markets were boring like the last month and they just went sideways, then this was a great range to have a bot just buy and sell for you. If it pumped like this, well, you probably took some losses. So again, very difficult to predict. Yield farming and liquidity pools. So this is a more decentralized finance tactic where you can make money in yield farming, adding to liquidity pools, but they do come at a risk. So this is Turbos Finance. It is a decentralized exchange on Sui network, and you can get some decent APR. So let's sort by APR and let's see what's the most you can get. And I guess that is 400% APR from the Wall USDC pool. And if we are going to be joining a liquidity pool where we add our liquidity, so that would be the Walrus token and USDC in this case, we could be earning rewards for providing to that pool as a liquidity provider, so LP. So that is what you could earn in fees. And the idea behind this is you help facilitate these trades on this platform. And anytime people do trade, they have to pay a fee, and that goes to the people who provided that liquidity. So by you putting your funds at stake, you allow people to trade and you earn fees. Now, this is great, again, much like trading bots, if the market goes sideways. If the market does not go sideways, then you do take on some losses or some gains, where maybe holding will be better if the markets are pumping, whereas if the markets are dumping, providing in a liquidity pool will help cushion those losses. So that is something to consider. Now, the APR is pretty good on this platform, and it's always better with a trusted coin. So you can see that with these less known coins, the APR is incredibly high, where it's like in the millions of percent, but you can see that there is no liquidity. They did $2 in volume, $12 in volume, $4 in volume. So that's the issue. They didn't have any liquidity and they couldn't really make that much money from it. So that is something I would avoid, because obviously if there's $9 in trading volume, you put $1,000 in there, well, you're not going to be really getting that APR because it doesn't have the trading volume to support the amount of gains that you would get for the liquidity you put in. I know, advanced topic, little complicated, but I can always help break that down in more detailed videos. I just wanted to break down all the different opportunities in crypto for you as an investor, and you can expect more content diving into each of these when I get around to it. So let me know which one you want to see, and we'll walk through that in potentially a live stream, or I'll make a video on it, and yeah, we'll figure it out. Now, investing in crypto, still very risky, but after being in crypto for 8 years, I know there are opportunities, and we have to limit the amount of risks we take, and we can't get too greedy because that's when you lose money and you have to continue making YouTube videos to support those losses. So just being very honest here, and I want to help you not lose money because it's very easy to do that. All right, if this video was helpful, you know what to do. That's engage with the video, like it and comment and stuff like that, or subscribe. And with that, I hope you got your full value for today.